Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/Mish Talk. Welcome back to the show, Mish.
Pleasure to be back on.
Is it kind of interesting or even disturbing that Alexandria Ocasio-Cortez, the far-left member of Congress, agrees, along with President Trump, that the U.S. maybe should be devaluing its dollar?
Well, what was more interesting, well, first off, I don't agree that the U.S. should devalue the dollar. It's crazy. It's going to create bigger asset bubbles, and they're about ready, poised to bust anyway. Of course, I've thought that for a couple of years, wrong. But more interesting was her comments to Jerome Powell, Fed chair. She was quizzing him about essentially the Phillips curve, and Powell admitted that they got it wrong. You know, that maybe inflationary pressures aren't so great when job growth is that good, and that they're rethinking. And when she asked him the question, quizzed along those lines, he laughed and admitted that they got that wrong. So that was kind of interesting. She had a good conversation with Powell, and people were tweeting about it. Imagine that, AOC saying something intelligent to Powell.
Well, she does seem to ask sharp questions. I don't know if they're well put or not, but unlike a lot of congressmen, she seems to be at least prepared before she goes into a committee meeting, even if some of the stuff might seem a little wacky.
Pretty much so. I would agree with that. Think back to all the times that Ron Paul had a chance to interview Bernanke and just rambled and droned on and on and on about all kinds of stuff, just totally wasting his time. She didn't waste her time, did she? No.
Well, with U.S. job numbers still very strong, are interest rate cuts needed to boost an economy that seems to be doing okay?
Well, interest rates cuts really aren't needed, no. The problem here is the Fed has blown bubbles and doesn't want those bubbles to pop. That's what this is all about here, trying to keep asset prices inflated. I don't know if they understand what's coming. I rather doubt that they do, because they still look through the myopic eyes of price inflation without looking at asset bubbles. The same mistake they made in 2007, and actually all the way from 2002 through 2007, and from 1998 to 2000, they just would not lean on asset bubbles, and they haven't done it. These things are going to burst anyway. The question is when. I don't know. I certainly thought it would have happened by now. It's one of the things I said on Coast to Coast the other night. These bubbles have taken on a life of their own. I'm looking at another bubble in housing right now. I've got some charts coming out later this afternoon. How home prices have outstripped rent, which is all they look at in the CPI, and also outstripped hourly wages. The last good time to buy a home, by my calculation, was about January 2012, 7 years ago.
So with U.S. Housing getting bubbly, what's going to happen when prices start coming down?
Well, home prices start coming down, asset prices start coming down. The retired boomers flush with cash, that's who I believe has been buying all of these SUVs and other things. It's going to put a dent in spending when boomers suddenly start worrying, oh, my stock market is, stocks are going down. I don't have as much saved as I thought I had saved. It's going to be a long, painful process, and not to mention pension plans. Mercy, the recent calculation on Illinois pension plans is I don't remember the exact number. I think it's down from something like 30% all the way down to 24% funded. My gosh, imagine what happens here if prices just decline a mere 10%. We're going to be talking about pension plans running out of money within 10-year time frame.
Of course, too, they're talking about lower interest rates, perhaps even negative interest rates. What does that do to pension plans?
I don't think the Fed is going to go to negative interest rates here. I think they might go back down towards zero. But we'll see. The problem with negative interest rates is they actually punish banks. You have excess reserves, and right now they're paying interest on excess reserves, and at negative interest rates, the bank owes the Fed money. This is one of the fundamental mistakes that the ECB made with negative interest rates. They have banks, Italian banks, and Deutsche Bank in Germany, insolvent, and they're essentially charging them money to hold excess reserves. I don't think the Fed will be that stupid. Now, I don't agree with the Fed bailing out the banks like they did, but the ECB tried it. They got it wrong and actually hurt the banks, damaged the banking sector with negative interest rates. I don't think we're going to head there in the U.S. Could be wrong. We have a lot of groupthink at central banks, but I think the Fed is going to look and see that it didn't do Europe any good and not go down that path.
We always talk about the wisdom of the ancients. Well, human financial policy has been around 5,000 to 10,000 years. Only now have they thought about negative interest rates. Isn't there a reason for that?
Well, it's logically impossible. It's logically impossible to have negative interest rates. Here's why. Think of it this way. Negative interest rates imply that you would rather have 90 cents 10 years from now than $1 today. That's obviously crazy. And the only reason why we have them is central banks have manipulated interest rates to a negative situation. It's logically impossible for this to happen. It could not happen in the real world. That's why it's never happened. It's only happened when central banks have manipulated rates down.
We'll have more with Mish Shedlock right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mish Shedlock. Mish, Brexit, the Bank of England is now saying there's a good possibility they'll have a non-negotiated Brexit. Is that good or bad news for England, especially in the long run?
It's excellent news for the UK, in my opinion, in the long run, perhaps even in the short run or medium-term run. In the short run, there's going to be some pain over this, for sure. A collapse in trade is never a good thing. But you're also making an assumption here that there's not going to be a deal. I'm not willing to make that assumption yet, although it's very possible. Certainly the EU has said over and over and over again, we're not going to reopen this deal. But that's what they say. When push comes to shove, they never believed Theresa May when she said no deal is better than a bad deal. They never believed her, and they were right. And they pushed her to the wall, but are they going to be able to push Boris Johnson, who is going to be the next Prime Minister of the UK, are they going to be able to push him to that wall? I don't think so. So he is going to present them with a real choice. We're going to walk away, and we might stop all payments on everything to the EU, or we're going to reopen this deal. Now, I don't think they can reopen the backstop, at least not directly. However, I believe, they could agree to making it temporary with a time limit, say 2 years. The other thing they could do, which would, also mitigate things, is simply agree to, some sort of, customs union for a time period, or they could agree to not use the World Trade Organization, the WTO trade agreements. Instead, they're going to say, okay, we won't charge each other tariffs, and this will go on for X number of years. There's all kinds of things that they can do without having to renegotiate the withdrawal agreement. I wouldn't say the latter is impossible. It's very difficult, though. And the reason is all 27 nations in the EU have to agree. Now, they agreed to give the Brexit negotiator for the EU, Barnier, Michael Barnier, authority to do that. But, once it's rejected now, and once they've extended it, all 27 nations have to agree. I don't know that France would. It depends on what kind of deal they work out. I think if everyone wants a deal, and they should, then France will kind of reluctantly be forced to go along with the deal, or France will, take the blame here for being the one to push this thing into a absolute no deal. So it's still up in the air. I'm kind of favoring that there's going to be, some sort of deal that Johnson will get through Congress, but perhaps not. Either way, the UK is better off outside the EU, even on an acrimonious deal. And what will happen if the latter happens is the EU is going to hurt much worse than the UK because the EU is a net exporter by a huge amount to the UK. Germany will get crucified. Angela Merkel is worried about that right now, wants to talk about a deal, but she's no longer calling the shots at all. So we'll see.
How close is the European Union to breaking up?
Well, they've avoided one major step in that direction here now by simply agreeing to look the other way on the budget deficit and the budget debt and the overall debt in Italy. So they kicked that can down the road. I don't think they wanted to fight Italy at the same time that they were worried about Brexit. But that's going to come back when the next recession hits Europe. And it's going to, in fact, I think Germany is in recession right now. It's just not been called.
We'll have more with Mike Shedlock right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Shedlock. Mish, did the truce announced between the U.S. and China about tariffs at the G20 mean anything?
No, nothing that I can see. Especially when Trump lobbing another missile, economic missile, China's way, by agreeing for arms sales to Taiwan. All kinds of things here, and we also see China saying, well, China did not agree with all the things at that last meeting with Trump that Trump is claiming China agreed to. So these talks are essentially going nowhere, but what Trump did do with that is like walk back from the edge of escalating a lot of tariffs on China. I think he was very worried about further retaliations from China, on soybeans, on agriculture, on all kinds of other stuff, and also on the businesses, the importers in the U.S. complaining that they're getting destroyed by these tariffs. So he backed down with China a little bit, and that's all it was, while pretending there's some sort of chance for a deal here. Doesn't look like it to me. Now, anything can happen, but if there's a deal, it's going to be because Trump backed down, not because China backed down. So all the people that said that China would back down because they're getting hurt worse, they were wrong. I got this one right. China's not going to back down on this.
Are gold and silver going to go higher?
Well, nobody knows. But certainly the fundamental prospects look good to me. With Trump wanting to destroy the dollar, the Fed cutting interest rates, that's behind this last little pop. Technically speaking, gold is acting very well. Looking at a chart last night, over the course of the next year or so, 1,600 wouldn't surprise me on gold. It's a nice bounce from here. That'll be very good for miners. It'd be interesting to see what the stock market does in that time frame, especially if the Fed is cutting rates and the U.S. enters recession as I expect.
U.S. companies have been in share buyback mode for the last 2 years. Is that going to continue if interest rates come down?
It depends on what happens to sales, and if we're in a recession and companies start getting worried. Certainly there was no boom in capital spending, which was the alleged reason, for this tax patriation holidays. Companies are going to go out there and expand if we do this. Didn't happen. I never expected it to happen. The buybacks will continue until companies get burnt by it, and they'll get burnt by it as soon as the stock market heads down and stays lower, as I think is long overdue. Hussman thinks we're going to see at least a 60% decline from here over X number of years, with with X being unknown. I think it's likely to be way longer and more drawn out than the 2007 to 2009 bust we had. So those looking for a crash are probably wrong. I've not been looking for a crash, but I have been looking for sustained down. Just hasn't started yet.
Mike, thank you so much for chatting with us.
Pleasure to be on.
My guest has been Mike Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. If you have any questions for Mish or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.